Now, Martha, you talked about corporate structure, and I think that's a perfect segue into some of these, well, the newest tax credit, which has an
Mm.
interesting clause
Mm.
about non-taxable entities. This is novel, and we knew this was coming, but seeing the final legislation and seeing it legislated certainly. Has been very interesting, and I'm so excited to see how this plays out because it really opens the tax credits up to a whole swath of new folks. Do you both want to say a few words about that clean electricity tax credit and
Sure.
why it's sort of special?
Yeah, for sure. So maybe I'll tackle the structure piece, and then Yara, if you want to talk about the credit eligibility and use cases, all that kind of good fun stuff. So as we said, the clean tech ITC that was made for taxable Canadian corporations, and so what you have to think about there is that can include not just Canadian-owned taxable Canadian corps, but also foreign-owned taxable Canadian corps, and that is really the reason behind our 100% audit rate in that program right now is because that means those are refundable, so cash dollars from our country out the door to potentially foreign owned entities. So that's for the clean tech program and really that background as to why every single claim will get a full CRA audit review. But building on to that, so the government did recognize that yes, this credit, the clean tech credit, is really restricted to that business community.